All right, there we go. Okay, so I guess, again, so this is a workshop just to give you an idea, right? So what I call private mortgage 101 workshop. So I usually have 3 workshops. 101 is like introductions, and then 201 is more like an in-depth review on how the due diligence is being done. And then the third one is more like experience sharing over the years, share with you all the knowledge and experience, right? Okay. And then I'll go into that in more detail later, right? Just give you an idea, like introductions, right? So I saw this solid return minimum risk investment, right? And then I'm gonna show you why I think that is, right? And just a bit of disclaimers, I'm not a financial advisor, I'm not an accountant, and I'm not an attorney, but I am a licensed mortgage professional, so I am a mortgage broker. Okay. All right, so everything here talk about is strictly regarding the mortgage investment, which I'm licensed to do that. I can educate people on how to do all the mortgage investment and whatnot. Okay. Okay, so this is my website, EPI Investing, and I am part of the Select Mortgage Group where I hand my mortgage broker license.
I see.
Okay, all right, so there we go. So this is just to give you an idea on what I've done over the years. Okay, my experience, right? So I think I started back in 2014, January, that's where I did my first transactions. Okay, and then since then I've done a lot of transactions over the years, right? So this one was the snapshot in September last year, right? When I did a summary on what I've done over the years, right? So I've done probably over 40 transactions. Right now it's close to 50 or 50 plus transactions now. Okay, so I've done over 4 million of loans, meaning the amount of mortgage that I've lent out and come back. Okay, so you can see here some of those started and some of those hasn't came back last time, but I think majority of it has came back already.
I see,
okay,
I see.
So basically right now, last year was about 1.86 million. I think right that's about 2.2, 2.3 million active loans. Okay, so I'm helping people to invest, right? So it was generating about $17,000 of monthly incomes.
Wow.
Okay, wow. So that's roughly about 10.82%. Okay, so basically, this is why I call a truly passive income investment strategies, right? Once you put your money, roughly about 10% average rate of return, and then depending on how much money you're putting in, then you start collecting this interest income every month. Okay, and really my goal here is I want to share all the knowledge, experience I gained over the years. I learned a lot. Right, I really want to make everyone aware of this alternative, because majority of the general public, they don't know about this alternative investment vehicles that is available to them.
Okay.
Okay, and there are reasons behind that, right? Anyway, so that's my goal.
Sounds good.
So that's why I'm spending a lot of my time just going around telling people, educating people about this, right? And then hopefully people will have a better alternative when they come to investments.
Right.
Okay, so this is where I am, just a short experience profile. So let's start quickly. What is a mortgage? Just start basic. What exactly is a mortgage, right? So in a simple term, basically, whenever a borrower or buyer, they want to buy a house, usually they don't have enough money, right? So what do they do, right? And then they go to the bank, right? And then the bank will lend them money to buy the house. Okay, so what the board does in turn is basically they will create legal documents. And those legal documents basically giving the banks right to put a lien on the properties or put a charge. Okay, so if they default, then they can take the house away. So basic mortgage is simply a set of legal documents granting the bank that right to take the property, right? So basically after that, everything is signed, the mortgage will be recorded on the title office, the land title office or county recorders. It's like a public information services that there is this charge on titles, and then they cannot sell the property unless they pay the bank. Okay, so this is the mortgage, very simple terms, right? So now, what is a private mortgage? A private mortgage basically, instead of having a bank lend the money out, an individual comes in, they lend the money out.
Right.
Okay, and you can do that. Not if as long as you have sufficient money, you can do that yourself, right? It doesn't have to be a bank, right?
That's right.
And that is what we call a private mortgage. Okay, so all of this is basically you will be acting as a lender in this investment. You are lending your money out just like the banks. Okay, and then there's a reason why the banks love mortgages so much, right? Because they use a bigger motor to secure the investments,
That's right.
right? And the bank, they do not lend 100%. They lend usually up to 80% or 75%, right? That's why they have the equity to protect the investments.
Right.
What that means is underlying asset, securing your investments, it worth more than your investments.
Mm-hmm.
Like compared to buying stocks,
Yeah.
let's say you buy at $20. Does that company really worth $20? You don't know, right?
Right.
I mean, it may be saying, "Well, I'm selling $20 in the market. It may be worth $20, but on the book, what does it truly worth?
Right.
Do you know what how the company is run? Can you do any review to determine what the actual value of the stock? It's not as easy,
Yeah.
right? But this one is very different, right? You can do an appraisal. You can tell exactly how much the property is worth. Very deterministic, very controllable, right? So that's why I love this one. I think it's one of the safest investment that you can find, right?
Mm-hmm.
Okay, so this is private mortgage, right? Now, so just to give you an idea, well, how do banks make money? Okay, basically they take your hard-earned money, you deposit to the bank, lousy GICE rate, maybe 0.5%, 1%, whatever rate, right? You give your money to the bank, and in return, they take your money, they lend your money out.
Mm-hmm.
Credit card, mortgages, line of credit, whatever, at superior rate, anywhere from 6% to 24%. Right? That's how the banks make their money. They don't use their own capital.
You mean when you take mortgage with a bank, they
No,
charge
like,
you?
this is how the bank make their money, right? So when you deposit your money to the bank in turn use those money and lend it out.
Yeah.
That's how the banks make the money. The spread between they pay you the interest rate
Yeah.
and the interest they charge people.
Right. Right.
Right?
Yeah.
That's how the banks make money, right? And I call that infinite returns, because the banks, they don't have to get money out of their own pocket,
Oh.
right? So there's really no capital cost for them.
Mm.
That's why it's infinite return for them, right?
Right.
So that's how the banks make money. And what I'm saying is, instead of having the banks make the money, why don't you make the money yourself
Mm-hmm.
by acting as a bank and lending your money out?
Mm-hmm.
That's why private mortgage comes in, right? You act as a bank, you lend your money out. This one is very common. It occurs on a daily basis. It's nothing new, right? It has been there for like 10, 20 years.
Mm.
And it's been very common for real estate investors to obtain this private funding for their real estate projects.
Oh.
And then I'll go over that later, why they love private mortgage over conventional mortgage. Conventional mortgage meaning getting the financing from the bank, institutions. Private mortgage meaning getting the financing from individuals like myself.
Mm-hmm.
Okay, so yeah, so you can do that, and it's been there for years. And this is really a great to earn passive income in real estate without actual involvement on the transaction. You don't actually buy the property, you don't fix it up, you don't manage it, you don't have to worry everything.
Mm.
Your borrower does, right?
Right.
In return, you enjoy those passive interest payments that they pay you because you lend them money.
Right.
Okay, so that's why I love this one. They basically sit back and relax. That every single month, the interest income comes in. Of course, you have to do it the right way, right?
Mhm.
If you do this, structure it correctly, then the risk is fairly minimal, right? And then I'll show you later how to define higher risk mortgage investment or lower risk mortgage investments, right?
Right. Right.
Okay. Okay. So now, private mortgage. Now I want to show you an idea on who are the borrowers that I focus on. Okay? When you look at mortgage, majority of the time, we're just thinking about borrowers buying a house to live in. But for me, all of the borrowers that I'm lending to, they are what I call house flipper or house redevelopers. They do not buy the house to live. They buy the house to renovate and sell.
Mm.
So that's why all these mortgages are short-term mortgage, 6, 12, maybe maximum of 18 months, right? Because they want to go in, get it done, and sell quickly.
Right.
Okay, so I'm going to talk a bit more about what those house flippers are, right? And what do they do, right? So here's just a sample on a project on a house flipper will do, right? Basically, they buy this property at $155,000.
Oh, where is that?
So somewhere in the state, right?
Oh.
There's a lot of city in the state
Yeah.
that are in the price range between 100 and 200K.
Oh yeah.
I mean,
yeah,
Cooper
that
is
makes
different,
sense.
right?
Yeah.
You can't find anything like that unless you go to all the way to Hobbs, maybe, right? So
That's right.
so yeah, so all of this are in the US.
I see.
Okay, So this is basically a single family house, $155,000. At the beginning of the project, this is their renovation estimate, $55,000. About 35 in labor, $19,000 in material, and some landscaping and whatnot. Okay, so this is the estimate upfront. Okay, and then so basically this is what it looks like, right? 7 weeks early is pretty outdated, old, right? And they did a curb appeal, they redo the landscape, they repaint the house, right? Give you a really modern look after that, right? And then again, look at the kitchens, right? It's outdated up there. So they just do a fresh coat of paint, all new cabinets, making moderns, right?
Interior,
Exactly, interiors, right? And this is what they do, right? And then bathroom, just tear out the old bathroom and then putting in something new. This is what I call a lower end renovations. You can see all the, they are more modern, but they are not luxury.
Right.
So that's what I would say this is a lower end fix and flips.
I see.
Okay, and so this is what they do. And then at the end of the project, basically this is what it looks like, right? Purchase price $155.
Yeah.
Renovation $55,000.
Right.
Miscellaneous cost about $5,000, so probably some interest income, probably some hazard insurance premium and stuff like that, right? And then $14,000 realtor commission to sell the house.
Oh, I see.
Okay,
I see.
so all in all, that's the total cost, about $229,000.
Right.
Okay, and the asking price is about $280. I think it got to about $275, $278.
I
So
see.
basically, their profit is like $50,000 in 8 weeks.
Oh, that was fast.
Right, 8 weeks,
Yeah.
right? And then see how much money it is. Like the all-in cost was like $230. So it's making slightly 30 to 40% return in 8 weeks. When you look at it in a year, it's like 200%, right?
Right.
So that's why these flippers, they have huge profit margins, okay? But they want to do this quick. And time is really what they are looking for, right? They want to get the financing quick. They want to close on the house quickly because it's a good deal, right? Everybody's fighting for that.
Right.
They want to renovate and sell, right? And that's why when you look at this, they can afford higher interest rate.
Oh, I see. I see.
Right? Because of their profit margins, right?
Right.
But not all the projects are like that, right? I mean, there are some projects with lower profit margins and some project with even higher profit margins, right? But this is just like a typical scenario on what they do.
I see.
Okay, just to give you an idea, right? Okay, so basically these are the private mortgage board that I focus on.
Yeah.
Okay, and I only lend to this type of borrowers, right? So these investors, they already buy the house at significant discount, right? Anywhere from 30 to 55%, 50% below market value when they buy.
Is it because those flippers know what they're looking for?
Yeah.
or-
So basically, what they look for what they call a distressed sale. So either the house is outdated,
Yeah.
or maybe there's some code violations,
Yeah.
building code violation, or maybe the owner is like divorce or bankruptcies, right, or foreclosures, right?
So they have the experience, so they
Yes.
know what.
So they
Okay.
basically have their marketing strategies in identifying those distressed sales.
Oh, I see,
Okay,
I see.
so usually you don't buy this type of property on the MLS.
Oh.
MLS is very, very competitive. You can still find good deals, but a lot of people are finding good deals on there. Then that means competitive is very high.
Oh.
Then your profit margin will be low, but the competitive is high, right?
Right.
So usually they use other avenues to find those deals. They use direct mail, right? They may be partnering with some bankruptcy attorneys to get some of those leads coming in, right? Maybe to partner with some divorce attorney, right? Or some credit repair professionals, right? And they have their own, they maybe go to the county or city hall and they go through the property informations. And then they will find, okay, this property is actually going through probate, meaning the owners died, and then the property is going to the heirs.
Right.
The heir may not have enough money to maintain the property. They need to sell it quickly, right? Stuff like that. So
Yeah.
there's a lot of creative way in finding deals that
see.
most people don't know about, and it's a lot of work
Yeah.
to find those deals. It's not easy to find them,
Yeah.
but once you set up your business,
If that's your business.
that's
then
your business.
Yeah.
That's a different story, right?
Yeah.
So you can, like from my perspective, you can't really do this part time.
Right. Yeah.
I try this. I know exactly what you have to do. Right? It's a lot of time to do that, right?
I see.
But anyway, so that's why they make huge monies, right?
Right.
More effort, more money.
That's right. That's
Right?
right.
It pays off, right?
Yeah.
So that's what they address distress sale. Quick close is king. Good deals has to close fast.
Oh.
Usually they want to close 1 to 3 weeks. For me, I can close a transaction in 2 weeks. Meaning that from the day I commit to them, I'm gonna fund your projects.
Yeah.
I need 2 weeks to finish off my due diligence.
So the reason being because of the higher interest rate, if they can close faster, they don't have to pay as much overall in the interest. Is that the...
Well, they want to close fast because the sellers is a distressed situation. They want to sell the house quickly in order to get the cash.
Okay.
That's why this investor, they need to close on the house quickly. Let's say if this is a good deal.
Yeah.
Two investors want to buy this. One may be offering a higher price, but they need 6 weeks to close,
Yeah.
right? And then the other one is offering a lower price, but then it's like 2 weeks to close.
Right.
Usually that one can win, because when a seller is in a distressed situation, they need the money quickly,
Oh, I see.
right?
I see.
So that's why most of these people, they want to close on the transaction quickly.
I see.
And that's where my private lender comes in. We help them out, right? If you go to the bank 6, 8, 2 months, 3 months to get conventional financing in place, right?
Right.
And then especially when you buy a property to flip, it's not a conventional mortgage anymore. They consider it as a commercial mortgage.
Oh.
So they're not gonna get the 3% rate like you buy a house to live in, right? So it's different stories, right?
Mm-hmm.
So anyway, so that's why they need private money that allows them to act really fast.
Right.
Close on it quickly. Otherwise the deal will be gone, right?
Right.
And that's why usually they can pay anywhere from 8% to 15% interest rate for the money that they are borrowing.
Yeah.
And they will offer anywhere from 1 to 5 point. 1 point is basically 1%.
Oh.
So let's say if you are borrowing $100,000,
Yeah.
and then me as a lender charges the borrower 2 point. It means he has to pay $2,000 to get that $100,000 loan, right?
Oh, I
so that's
see.
2 point, interest rate and point.
Point. Okay. I see.
Okay,
I
so
see.
it's just to give you an idea what those borrowers willing to pay to get those money quickly and work on the project.
I see. I see.
Okay.
Okay.
All right. Okay, so yeah, this is basically what I talk about. Why would they want to pay so much, right?
Right.
They are buying a huge discount. They made the money in the buy, right? So they factor in all the costs already when they negotiate with the distressed sellers, right?
Mm-hmm.
And then flexible terms, conventional lending is too slow, right? 2 3 months and they have limits. They may be able to lend you 1, maybe 2,
Yeah.
not more. And then more than that, you have to go to commercial.